You know how the rupee exchange rate you see online is never quite the same as the one your bank gives you? It kind of makes you wonder, right? Is there even a single true price for the rupee? Well, it turns out there is, and it's a number that, believe it or not, quietly runs the entire Indian economy. So let's get into it.
So on one hand, you have the rate we all see, the bank card rate. That's the one for, grabbing a few dollars for a trip. It's got the bank's profit baked right in, and it's bouncing around all day long. But on the other hand, we have the rate that actually matters, the RBI/FBIL reference rate. This one has no profit margin, it's locked in just once a day, and it's used for the biggest, most important financial deals in the entire country.
Okay, so let's talk about the rupee's official price. Think of it like a benchmark. It's the one number that everyone agrees on, a single source of truth that keeps the massive gears of the Indian economy turning smoothly. It's all about fairness on a grand scale.
All right, let's put a name to it. It's called the FBIL reference rate. That stands for Financial Benchmarks India, and they're the ones responsible for calculating this magic number every single day for the US dollar, euro, pound, and yen. And you better believe the Reserve Bank of India is watching over the whole process to make sure everything is completely above board. And listen, this isn't just some abstract number in a spreadsheet. As of early 2026, the all-important rate for the US dollar blew past the 90 rupee mark. Now, when the numbers get that big, even a tiny, fractional difference in the exchange rate can literally mean crores of rupees. So getting this official rate exactly right has never been more important. So how in the world did they come up with this one single number that everyone trusts? Well, it's not by calling up a few bankers and asking for their opinions. Since 2016, the system has been purely data-driven. It's a recipe designed from the ground up to be transparent and, most importantly, impossible to manipulate. It's really a four-step process. First, FBIL watches all the real-deal US dollar to rupee trades during a 1-hour window in the morning. Second, and this part is pretty clever, they randomly select just a 15-minute slice from that hour. That stops anybody from trying to game the market at a predictable time. Third, they filter the data to make sure it's solid, meaning there have to be at least 10 trades worth more than $25 million. And finally, they do a volume-weighted average. All that means is that bigger trades get a bigger vote in the final number. It just makes sense, right? It follows where the real money is moving.
Now you're probably thinking, okay, that's great for the US dollar, but what about the euro or the pound? Well, for those, they use this really smart shortcut called crossing. Instead of reinventing the wheel, they just take the super solid US dollar rupee rate they just made and then combine it with the global euro to dollar rate from that exact same 15-minute window. It's a genius way to make sure our Indian benchmark is perfectly synced up with what's happening globally.
All right, so we know how the sausage is made, but who's actually eating it? Who uses this rate? Well, let me tell you, this isn't for you and me buying stuff online. This is the official number for the heavy hitters, the real giants of the Indian economy. The biggest user, by far, is the wild world of financial derivatives. Every day on the National Stock Exchange, traders are making massive bets. We're talking thousands of crores on where the rupee's value is going to be in the future.
But here's the question. When those bets are due, how do you decide who won? You can't just pick a price out of thin air. That's where our number comes in. The exchange uses the FBIL reference rate to settle every last contract. It's like the final, impartial referee's whistle. Game over. No arguments, no disputes. Next up, India's corporate giants. Just imagine a big IT company in Bangalore bills a client in Germany for €1 million. Their books are in rupees, so which exchange rate are they supposed to use for their tax filings? I mean, the rate changes every second.
Well, here's the thing. They don't get to choose. They have to use the official FBIL reference rate for that day. This creates one standard rule for everybody. It stops any company from cherry-picking a rate that might, make their profits look a little smaller for the tax department. It keeps the whole system honest.
And get this, even the Reserve Bank of India is a huge user of its own system. The RBI holds an enormous amount of dollars, euros, and gold in its foreign exchange reserves. You can think of it as the nation's financial war chest.
And every single week when the RBI has to report to the country how much that war chest is worth in rupees, they don't just eyeball the market. They use the official reference rate to put a precise value on their entire portfolio. This is what national financial transparency looks like. And the list just keeps going. Banks use it to value all their NRI deposits when they report to the RBI.
And big importers and exporters, they literally write this rate into their legal contracts so that there's absolutely no argument later about what price to use. It just settles the debate before it can even start.
So, let's just pull this all together. Why does this one number matter so much more than the rate you see on Google? It's because it creates a single, undeniable, legally binding source of truth for everyone to rely on.
This table really says it all, doesn't it? For every one of these major players, your average Google rate just isn't going to cut it. The stock exchanges need a number that will hold up in court, accountants need it to follow the law, the RBI needs a benchmark that's totally manipulation-proof, and big companies need it to avoid those hidden fees the banks charge on retail rates.
And that brings us to the real final takeaway. The FBIL reference rate isn't a trading price. It's more than that. It's a foundation. It is the bedrock of trust that a huge part of India's financial system is quite literally built upon. The daily market for the rupee is like a turbulent ocean, always moving, always changing. But this rate, it's the solid ground. It's the one anchor in the middle of all that chaos. And that's why this line is just perfect. In a world where the rupee is volatile, this rate is the only ground everyone agrees to stand on.
And that leaves us with one last really interesting thought. By taking human opinion completely out of the loop and relying only on a transparent, data-driven process, we've created a number that everyone can trust. And it makes you wonder, doesn't it? In the incredibly complex world of finance, maybe the best and the truest truth is an automated one.